Of course, we're in earnings season, Baba. It's great to have you on the show today. Give us a sense of the market's reaction, first of all, to the results that we have seen so far.
Yeah, Wole, good day to you. Basically, we had the avalanche of results being released today. Don't forget the fact that only yesterday, the result of First Bank came into the market, and of course, by all street of imagination, was very remarkable. With a gross earning of over 182 billion, and the PAT of about 46 billion. I think that's a very remarkable result.
All right.
Now, only today, we have results, coming in on Nigerian breweries, as well as Zenith Bank, and these results were quite good.
Yes, of course, results were good, but how did the market react to them? Some may argue that even the Nigerian breweries number were not fantastic, a pretty flat performance there.
Yeah, you're right. It actually did trade flat, but at the end of the day, it gained 1 naira and a fraction, closing, I think, about 117.50, But don't forget the fact that the market is not isolated from the happenings of the decisions that took place in, central bank. Only yesterday, increasing the CRR to about 12% from 8%. This clearly will impact on the market negatively, as you are aware. And of course, that is what we saw today. Most of the stock, doing flat, as it were.
All right, let's talk about that negative impact that you just speak about. First of all, we have the impact of rising interest rates, and we know the fixed income market has been competing for capital, for investments flows, and the equity market has really been constrained in that respect for most of this year. With the prospect of higher interest rates, what does that mean for equities in general?
Yeah, I think it's quite a bit of concern to the market. Don't forget the fact that where the interest rates on bond rate is going up, it tends to impact negatively on the equity markets. Clearly, like we have seen in the past 1 week, except for some of these CBN directive, as it were, we will have seen the market moving to well over 8 trillion capitalization. But I think that by and large, we will need to wait, a little longer to see how it pans out. But basically, I think the CBN is mindful of the fact that, tinkering with the MPR rate, from 12% further up, will have, a bit of negative impact on, particularly the industrial sector. Cost of funds will definitely go up. And this definitely will impact on the market negatively. I think that is a little bit cause for worry for our market, and by and large, we'll see how we can rebalance and the rate vis-a-vis what is happening in the market.
I was just going to speak to that. The fact that the borrowing costs for most companies are going to go up. I mean, we have the cement players, we have the other manufacturing companies, FMCG players, consumer good players. Everyone is going to feel the impact of higher rates. Now, with that prospect, where do you see equities going in the short term?
Well, I think what you see, the worst case scenario, it's a marginal drop in one or two of the stocks, particularly those ones that are not in the forefront. But for stocks like First Bank with fundamentally strong results, the UBE and all that, I think that there isn't going to be much pressure, negative pressure on those stocks. But I think by and large, I think we'll need to begin to see some realignment in the equity holdings and all that here and there. But I think by and large for that too, that those decisions are actually temporary decisions, and let's see if a review can come up sooner or later, so that we can have a rebalancing of the market based on the rate and the CCRO ratio as well.
Right. You just mentioned First Bank. You mentioned realignment. And I begin to think, many people talk about the fact that the Tier 1 banks are the banks that can probably deal with the pressure that the MPC decision puts on banks the best. And so do you anticipate, for instance, a flight to, if you like, safety towards the tier 1 names like First Bank, Zenith Bank? We just saw Zenith release today, UBA and perhaps GTB and Access?
Yeah. Yeah, well, what I tend to think that is likely going to happen in the short run is you're going to definitely see flight, to bonds, to equity and all that. But I think that what likely in the short run may not really work in favor of equity is the fact that the time to maturity is still plus or minus about 6 months away. So I think that pull to maturity on when most of those banks will begin to release their results will further pull it back, and you see those shares going up as well. I think that beyond the rate that we're talking about, for First Bank and Nestle, and Guinness as well. We'll see them going up, not shipping down so much and all that. But I think that the equity market, will definitely flatten out in the short run in view of the recent, CBN directive on increasing the cash reserve ratios.
All right, so you see the market going sideways in that. With that backdrop, what are your top picks? Which stocks are you comfortable trading in right now?
Yeah, like I've always said, Nestle released their result today as well, and by all stroke of imagination, that result is so fantastic. Upping their performance from about 4.6 to about 9.1. In the H1 result. I think that result is very fantastic, and it definitely will beat market expectations. NB actually, disappointed the market a bit because traditionally they've always been noted for interim dividend and all that. That's why it went a little bit flat today. But I think that you need to put your money in UBA, you need to put your money in First Bank. Those stocks are actually, they're always good to go, and they're money spending stocks, But by and large, all other stocks are, I think, depends on your time horizon and a few other factors. You have safe evidence most of the stocks in the listed stage.
Baba Ibrahim, Managing Director, Mainstreet Bank Securities, thank you so much for joining us.